today. Is the RBI's, are you at odds with the RBI's assessment of the growth number that they've given, or is this fair?
No, as I mentioned that, there are a lot of moving parts in terms of growth and inflation forecast, but I think the risk to RBI's 6.5% also looks to be on the downside at this point in time. This obviously will emanate from a much higher risk of global recession that will possibly happen as early as 6 months in case if these global tariffs are maintained. So I think to a large extent, India would not only face the uncertainty risk with regard to sentiment, but also with regard to actual hit to the real sector. So I think to a large extent, I believe 6.5 looks to be also an optimistic number. But on inflation, I think pretty much on the same page as the RBI, there are push and pull factors both on inflation. But on net, I believe that the disinflationary impulse will be the dominating one, which will basically emanate from much lower global commodity prices and possibly a supply cut of goods that China may dump to the rest of the world, and especially its trading partners in EM Asia. And as I said, historically, India has never been non-synced with emerging Asia in terms of cyclical downturns. So it's unlikely it will, outdo emerging Asia in terms of cyclical positioning.
Okay, Anubhati, would you agree with that in that because these are slightly unprecedented times and the tariffs rates are different, as well as how the economies are per se in terms of the quantum of exports to the US or otherwise are different, that India will be joined at the hip to emerging Asia, or could it be different if the tariffs stay for longer? I mean, final word with you, Anubhati.
Obviously, in the current environment, it is very difficult to be disjointed with rest of the world and emerging markets in general, because the theme which is driving every single country is what happens on tariff front, how long it sustains, will it cause a global recession or a US recession, will it lead to disinflationary pressure across emerging markets. So I think there will be a fair bit of association or co-movements between what happens to the emerging market at large and what happens to India. But India is definitely in a far better place because the extent of tariff imposed on India is lesser relative to, say, several ASEAN economies, and also because our exposure to US in terms of exports or goods exports is not as high as some of the other ASEAN economies. So yeah, relatively better place, but probably those advantages would play out over a slightly medium term. In the immediate term, I think India will continue to move in line with what's happening to the emerging market space at large.
And that pain seen in the markets today as well. Thank you to all of you for joining us on this conversation today as we break down the messaging coming in from the Reserve Bank of India, the policy completely fitting the bill in terms of what was expected by the street. A 25 basis point cut, yes, that has come in. Stance changed from neutral to accommodative. That is something that was also expected as well. The markets, though, going through their own level of stress, and gold loan companies in focus. I think this is important, Neeraj. Look at Muthoot Finance, now 9% down. Top loser on the street. Manappuram, interestingly, not that bad off. But the initial commentary coming in that Muthoot, as one of the largest players, has already adhered to a lot of the rules.
Yeah.
So if there are tighter norms coming in, will Muthoot be relatively better placed?
Maybe that, plus I think in Manappuram's case, the technical factor of the open offer price at 236 might be playing play as well.
Yeah.
And which is why not as much of a downtick. But suffice to say, a good policy, Tamanna, both of us would concur on that, exactly in line with what was needed and anticipated. So no changes on that front, which is actually a good thing. Now time will tell how the markets react to this. As Jayesh Mehta said, though, that if this was a normal time, then it would have been a thumbs up from the bond markets.
Yeah, I mean, the umeed zyada hai is waqt. Is how I can say the expectations are higher. And not surprisingly, considering what is happening in the world around us, IT continuing to hurt. We'll take a very short break. We're coming back with Ask Profit, where your specific answers, your specific questions will be answered. Stay tuned for that and more.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
I would have personally met 100-ish bankers. Almost 80% of them said no.
when you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही code बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razorpay powers almost 105 of them.
Then there is delivery. This stock has also been buzzing in trade. Dealers are indicating that there's a potential corporate development announcement, some acquisition announcement that the company could do when it comes to e-commerce express delivery space. So keep an eye out for delivery as well.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Mahima Vachhajani, and we'll take you through the next half an hour of trade. And the reason why this conversation is a little bit shortened today is because you probably listened to the RBI Monetary Policy Committee's decision, I should say, and it is in fact a rate cut. Mahima, 25 basis points was being baked in and it did in fact occur. But what more? And that really is the operative part. The change of stance, I thought, from neutral to accommodative is something that gives you a sense, according to the Reserve Bank of India Governor, Mr. Malhotra, of the direction that the policy rates will take going forward. And it's an acknowledgement more than anything else that the uncertainty that's prevailing globally is ultimately likely to have a bearing on Indian economy and growth going forward. And also the fact that inflation dynamics are relatively under control at this juncture. But let's talk about where the markets are. And in the context of global uncertainty, in the context of global selling off of risk assets, 9:30 a.m. today, you had the tariffs kick in, the US tariffs kick in, and you had bond yields in the US spike even more. In the context of all of that, a 0.7% cut for the Nifty 50 is really par for the course. If anything, the cuts in the broader markets are more to the tune of what you're seeing across the globe. 1.5% for the mid-cap index, about that much, maybe a little more 1.6% or thereabouts for the small cap index. And really, a lot of the experts that are speaking to us and have been speaking to us, not just today, but over the course of the last couple of days, are saying, don't venture out and take too much risk. There is too much that is happening that is unpredictable, and things could shift either way. Donald Trump is talking to various countries, or at least his administration is, and there could be some conversation that is in the offing with China. And of course, we are going to be taking a break. Tomorrow is going to be a trading holiday in the context of everything that's happening globally. Don't be brave at this juncture is the view that is coming in. Let's introduce our experts. We've got Rajesh Agarwal joining in right now, and in fact, we will soon have Vaishali Parekh as well. Rajesh, very good morning to you. Let me ask the first question today, and it is in the banking space incidentally, so let me ask that. IndusInd Bank, a few people are still venturing out and thinking of bottom fishing here. Would you say that that's not a very good idea considering the kind of erosion that you've seen in capital? Siju from Qatar has got this question. He's looking at a one-year time frame. Would you venture out and buy IndusInd at this point, or would you suggest that in the context of the RBI monetary policy decision to cut interest rates and likely more cuts going forward, another bank is a better placed option?
Good morning, Alex. As far as RBI rate cut is concerned, 0.25%, that's 25 basis point, was already discounted by the market. Everybody had an inkling that this is going to happen. That was it was already discounted, I would say. And the best part is the change of stance from neutral to accommodative, that is the positive one. And the inflation targets have been reduced for the first quarter to 3.6% versus 4.5%. That's another positive, and this is going to help the entire banking or NBFC space as such going forward. As far as IndusInd Bank is concerned, I think based purely on valuation parameters till now, whatever stands is, I think the valuations are very attractive. It's less than 1 to price to book and other things. But then you never know what will come out, because when things are not that good on corporate governance part, that's a difficult choice to make. What I would say personally is, if you have a good risk appetite, you can have at least 5-6% of your portfolio into IndusInd Bank, not more than that. It's small part, I would say, if you have a good risk appetite. If nothing comes out anything more from whatever has happened, I think it can give good returns in the future. But again, with a caveat, I would say that this is a high risk counter. One should better look at investing in good corporate governance companies or the banks where the valuations are good. HDFC Bank being the best one, I would say, or even Kotak Mahindra Bank for that matter, in the private sector space. In public sector space, there are a lot of banks which are trading at attractive valuation with performance being very good. For example, Bank of Maharashtra, that has been giving good performance for the last 3-4 quarters. Or a Bank of Baroda, even a large cap one, State Bank is doing very well. So why put money into a very high risk asset unless until, of course, you are a person who is ready to take high risk. These are the counters I would recommend.
Right, got your point, Rajesh. And first caller for the day is lined up. Dheeraj is calling in from Hyderabad. Dheeraj, a very good morning to you. I believe you have a question on Senco Gold.
Yeah, good morning. This is Dheeraj from Hyderabad. My query is regarding Senco Gold.
Okay.
So I'm holding 1100 shares of Senco Gold at 368 rupees.
Right.
So can I add more at current levels?
Okay, got your query, Dheeraj. I'll go to Rajesh quickly. Rajesh, the business update came in today. According to us, the analysis was that gold has already risen 33% as compared to Q4 last year. But the growth in retail space has been around 23% only. Do you see this as a negative, or the reading for you for the business update of Senco Gold is on a positive note? And plus, what's the outlook like, of course? Should we continue to hold or add more?
Good morning, Mahima. Senco Gold, if you look at the price, it has corrected quite a lot from its tops just because of the fact there were some corporate governance issue and other things. But at this valuation, I think it's a good buy at these levels. Can move up to 15-20% in the next 6 months or so. Numbers, whatever update they have given today, I think that is satisfactory. The revenue part which you are talking about is just because gold prices have risen so much, that people are reluctant to buy at this point of time, unless, of course, they have some occasion at their family, maybe a marriage or something like that. Otherwise, people are reluctant to buy at these levels. So that's the one of the reasons, I would say. But with the kind of expansion Senco is doing, basically it was a Bengal-oriented company, and then it started venturing outside Bengal also. And this company is doing good. At these levels, I think there is no high risk into this. Maximum due to market condition, it can fall by a little bit, but upside is open. So for 20% upside in the next 1 year, one can go long.
So, and by the way, even if you were to buy, Dheeraj, you may not be able to buy today unless it opens up, right? Because there are no sellers in the stock at this juncture. So bear that in mind as well. The next question is I think it's an interesting one. Suhani is joining in from Delhi. She's asking about Sterling and Wilson Solar, and a lot of people actually don't know this, but very large holder of the stake in SW Solar, which is Sterling and Wilson Solar, is actually Reliance Industries. She's bought at levels of 490, which is elevated levels. She's got 300 shares odd. I think that's the other way around. She's actually bought at levels of 490, guys. We've tagged it wrong, so we have to correct that. So if that is the case, Rajesh, would you hold on if she's bought at very elevated levels, 490, or are there better places in the renewable space? Adani Green, for one, is an option with the kind of work that they're doing in Khavda.
Yeah, I agree to your Alex that Adani Green or a Tata Power are better choices in renewable space than what Sterling and Wilson is. When you compare the numbers also or the capacity they have, I think they are on a better bet. But since the gentleman is already holding Sterling and Wilson, I think one should continue to hold unless, of course, it's trying to put new money into it. If you are planning to put new money, then you could, of course, go for Adani Green or Tata Power. Sterling and Wilson, of this massive correction, I think it's on a reasonable level at these levels. It's just a hold from our side.
All right, so that's the view with regards to where Sterling and Wilson is concerned, and Rajesh has given his preferred picks in the renewable space as well. Moving on now to the next query, IREDA is the next counter that we're talking about. Vishwa Vijay from Orissa is holding 300 odd shares, bought at 263 a piece, and he's sitting on a significant loss is what he's saying. And he wants to know what should be the next course of action for this particular counter. Vaishali, a very good morning to you. I'll come to you on this one. What are the charts indicating for something like an IREDA?
Good morning. Yes, so I think, what market on the whole right now, we are seeing a good corrective move. So talking about REDA also, it's on a downward trajectory. But I guess for now, the charts, what we are seeing is it's still showing higher bottom formation. So I would say keep 140 as your stop loss and continue holding. The confirmation of strength comes only above 170.
Okay, so that's the view on IREDA. Let's continue to talk about the implications of the Monetary Policy Committee's unanimous decision to cut interest rates and also the shift in policy stance to accommodative, what that means for banks going forward, because you have interest rates that are set to go lower for your deposits and also lending rates, but they could be heading even lower down the road as well. Rajiv Anand, Deputy Managing Director of Axis Bank, joining us now. Rajiv, very good morning to you, and thanks so much for taking the time.
Thank you for having me.
Absolutely, my pleasure. Were you anticipating, is this par for the course? Is this something that was baked in, was built in? Were you, in fact, if anything, expecting something more? And what do you make of the accommodative stance and what that indicates for the path ahead?
I think the 25 basis points cut and the change in stance from neutral to accommodative, was broadly speaking, quite anticipated. And if you see the reaction from the bond markets, you can clearly gauge that. In fact, there was a small part of the market which was also anticipating, perhaps especially given what's happening globally, that the RBI could cut by 50 basis points. But the 25 basis points and the accommodative stance was broadly on expected lines, par for the course, as you called it.
Rajiv, there was an acknowledgement, and this is what I gleaned from the policy statement or what the RBI governor spoke about. There is an acknowledgement of the kind of uncertainty and vagueness in policy globally and the response and the implications, unknown unknowns as he called it. And in that sense, are you having to, as a business, and would people have to reset their expectations for monetary policy in this year and going forward? I think even 3 months back, Rajiv, we were talking about shallow rate cuts in this cycle. Does that change now?
I think on the one side, the governor has acknowledged the fact that the inflationary environment in India is quite benign, and we are where he wants us to be, which is around 4%. And in addition to that, things like a significantly lower oil price is very positive from an inflation perspective, and the governor has sort of recognized that. On the other side, the RBI and the governor has also recognized the global uncertainty and has brought down their growth expectations for this year from 6.7% to 6.5%, and and to my mind, even the 6.5 looks a bit aggressive. So therefore, given that everything that's happening globally, I won't be surprised if that number over the next 3 to 6 months is pushed down a little bit. So therefore, in that sort of an environment, I think it gives the RBI space to be able to be growth positive or growth accommodative, and so therefore a change in stance from neutral to accommodative. And I think he made the important point that going forward, what accommodative means is that either rates will remain where they are or rates will come down, and so therefore a rate hike is obviously off the table. And I think that from a growth perspective is positive. And on the other side, we've already seen 2 rate cuts, a 25 basis points cut in the previous policy, 25 basis points now, and it is anticipated that we could get at least 1, if not 2 more rate cuts as we go forward.
I'm glad for that perspective. In fact, I'm glad for the perspective that you're bringing as well, Rajiv, as a banker, because ultimately we're talking at a time when credit growth system-wide, not necessarily the strongest. In fact, it has been a little bit muted, and there's an expectation perhaps that some of this will kickstart with a rate cut and more rate cuts going forward. What's your own analysis of what you're seeing on the ground? And also give me a sense of what you think the system level credit growth could end up being if some of the tailwinds, maybe from the fiscal side, that are kicking in this month will follow through as you maybe had anticipated.
If you look at last year, on the one side, we saw significantly lower government spending in the first half of the year, and therefore we saw some sort of slowdown. As a result of that, we saw a 5 handle in one of the quarters last year. I think as we go forward, and anyway, liquidity was quite tight in 24-25. As we go forward, both those will in a sense become tailwinds. What was an 80 basis points tightening for the last 2 years will become a 40 basis points fiscal tightening in the current year. And like I mentioned to you, from a monetary perspective, where liquidity was tight in the last year, we've already seen liquidity being in surplus at this point in time. The governor has also moved his stance from being neutral to accommodative. I think both those headwinds have now become tailwinds, and so therefore we are certainly a little more positive about credit growth in 25-26, which was around 11% in 24-25. We anticipate that number should get to somewhere in the vicinity between 12 to 13% in the current year. Having said that, I think one also needs to take into consideration the fact that the global environment has turned fragile thanks to everything that's been happening around tariffs over the last few days, and so therefore, where private capex was just beginning to tick up, it is possible that not just in India but across the world, private capex could slow a bit, and that could impact not just growth but also credit demand.
Last point that I want to raise with you, generally in a falling interest rate scenario, banks have to contend with compressing net interest margins, and I also want to understand from you the implications of the difficulty banks are facing in mobilizing deposits at a time when rates are coming off. One would assume that the attractiveness of deposits also becomes lower. Do you think that that's going to be a challenge? And what is your own estimation or expectation for compression of NIMs going forward?
See, what happens, from for a bank is, yes, fairly thanks to all the measures that RBI has taken over the last few years, a very large part of the asset book is what is called external benchmark linked, and those reprice, much faster. And obviously, on the way down, those reprice, faster than deposits. But ultimately, it's only a lead lag. In this environment, assets will reprice faster, deposits will reprice a bit slower. But if you look at it through the cycle, NIMs remain in a fairly tight range. And I think bankers like us and analysts who analyze banks, clearly recognize this, that there's a bit of a lead lag on both sides, depending upon whether rates are going up or down. Ultimately, banks are basically a marginal cost business, because whatever the cost of raw material for us, i.e., deposits, is inevitably passed on, to our customers who are borrowing from us, and through the cycle there could be some leads and lags.
Yeah. Okay. Leads and lags. Okay. So. Thanks so much, Mr. Rajiv Anand, for joining me this morning and for speaking to us. Pleasure speaking with you as always.
Thank you so much.
All right. Let's go back to some of the questions that we have. In fact, we've got Surya waiting on, calling in from Chennai. Hi, Surya. Very good morning to you. How can we help you today?
Good morning. I need suggestions about Suzlon Energy. It's the right time to buy Suzlon Energy shares for long term?
Okay, that's a good question. Rajesh, I'll come to you. We already spoke about a couple of renewable plays. Suzlon is also one of them in the wind energy space. It's down to 51. Is this attractive now?
See, I don't think so. I would stick to my earlier suggestions of Tata Power or Adani Green rather than going for Suzlon, although the fact remains that it has got a large capacity, reduced. In fact, it's almost debt-free after the fundraise and all, but still on valuation parameters, I think the valuation still stretch after the correction. So I would say at this point of time, maybe a trading opportunity here and there, it would have produced if there is a bounce back. But for investments, I would say avoid.
All right, avoid from an investment perspective is the view coming in from Rajesh on Suzlon Energy. Nidish from Bangalore is writing in for our next question and wants a view on Mazagon Dock. Again, this view is required from a longer term perspective. So Rajesh, I'll stick with you. What's your view on something like a Mazagon Dock and of course its peers as well?
See, very strong company, I would say. Go for it. The kind of correction it has witnessed in the last few days, 2-3 trading session has put the prices below the open offer price, and that's a very attractive price, I would say, for a long-term investor. Good order book, doing very well, prospects are very good. Not only Mazagon Dock, but the likes of Cochin Shipyard or a GRSE, they are also on a strong footing. If somebody has a time horizon of 2-3 years, these are the good companies to hold.
Mrs. Tilak Ved is writing in and sitting in Panchakula, as I understand it, and she's got SBI, State Bank of India, at a price of 703, and she's wondering at what price should she buy more for a period of 3 months. So first of all, that 700 around price is an attractive one. Vaishali, on the charts, how does it look right now?
So I think the stock overall is showing quite a good strength. So I would say that right now we are seeing a little bit of retracement. So in all likelihood, if you get a chance at around 740, 730 levels, that would be once again an ideal level, and look for a target of 830, 840.
Okay, so that's the view with regards to where SBI is concerned. Our next query is from Santosh, who's writing in from Chennai. He's holding 200 odd shares of Goldium International at an average price of 170. and he wants to know the view with regards to how US tariffs have been imposed on India and how it will impact Goldium International. Rajesh, I'll come to you on this one. I was talking to one of these gold exporters of India, and they said that they will be probably transferring the entire tariff pressure on the consumers and customers at the end of the day. So the impact will not be as much as the street is expecting. What's your view like for something like a Goldium International?
See, Mahima, this tariff is going to put a dent on global growth, and that's going to put pressure on these jewelry stocks, because if the growth is slowing down, who is going to buy jewelry stock? And the biggest problem is quantification of this tariffs at this point of time is a difficult task to do, in which company what will happen. So it's better to avoid these kind of companies which are basically dependent on exports, and moreover jewelry exports, because as we have discussed just now, gold prices are at very high levels, 90,000 odd, almost 90,000, and at this point of time I think these are stocks which should be better avoided.
Avoid gold IM as of now. Okay. A stock from a sector that is in focus, earnings of course for the IT space kickstart tomorrow. TCS is what kickstarts things. It's down about 1.3%. Remember, there is a major brokerage, Jefferies, that has come out and cut its view or its tag on TCS from a buy to a hold, and it's dramatically by 27% cut its target price as well. Rajesh, I don't know what you think about that. 3,300, if I'm not mistaken, is the target that they have. We've got a question, Satish Nanna, who's writing in from Goa, and he's got 700 shares of Infosys at 1,650. Can it be bought at the current juncture, particularly because, relatively speaking, there is also a conversation of a relative cheaper valuation for Infi compared with TCS?
I totally concur with your view that Infosys is relatively cheaper when you compare to TCS. Strong balance sheet, having good order book, order flows has been decent, I would say. And they are moving into AI and cloud and all those things. And at these levels, I think all the risk associated with the US tariffs or discretionary IT spending going slow has already been discounted. It can fall further there. I can't deny that because of market condition, but the valuations are very attractive. Somebody has a time horizon of 12 to 18 months or even higher. So it's a buy from our side at these levels.
Buy for Infosys from Rajesh's end. Continuing with the IT theme, Ajit from Bengaluru is holding Persistent Systems as well as LTI Mindtree, and the time horizon is 6 months, and he's sitting on an average loss of around 25% on both is what he's saying. He wants to know as to what should be the next course of action for him, and also wants to understand if he should switch to something more stable like hotels or hospitals. Vaishali, I'll come to you on this one. First of all, what are the charts indicating for something like a Persistent and LTI Mindtree, and if he wants to exit the two of them, should he enter some hotel or hospital that's looking attractive on charts right now?
I would say actually, the stocks have been really so beaten down and they are coming at good levels. So Persistent can be an add because, of course, to my understanding, everything is cyclical. Right now, with all this turmoil going on, I would say for a long-term perspective, it's an opportunity to buy. So LTI, Mindtree, Persistent, I would definitely suggest if you're holding at higher levels, add more at these levels. Wait for the markets to stabilize and you will see a good up move coming in these stocks as well. And as far as hotel and hospital stocks are concerned, we are already seeing a trend setting in. Already a run-up has taken because Apollo Hospital, they are all showing strength, but I guess not a good level to buy right now. So I would say stay put and add more in decline. Okay.
Muthoot Microfinance is the name of the counter that we're talking about. 129.9 is the buy price, I believe. No, actually, bought levels of 258, 259, I think, is actually what it is. This is Ajit from Kerala. What should he do? Rajesh, any view on this one?
Try to exit, I would say. Microfinance, as it is surrounded by a whole lot of risk, I would say. Yes, the NIMs are high, but then the risk is also high. There's always a risk of NPAs. So it's better to switch out of Muthoot Microfinance, or maybe a better NBFC like a Jio or a Poonawalla would be a better choice in NBFC space.
Right, Tata Elxsi is the next counter that we're talking about. Anshu from Chennai is writing in. He's holding the counters since 5,500 levels for the investment purpose, and he wants to know the future outlook of the company. Rajesh, I'll stick with you for this one. What's the view like for Tata Elxsi?
A very strong company, no doubt on that. They're doing very well on animations and these things. The order book is very great. Belonging to the Tata Group, there is no issue of corporate governance as such. The only issue is that it has exposure to US, from which we have seen a massive cut coming in Tata Elxsi in the last 3, 4, 7 trading session. So for anybody looking for buying for a long-term horizon, by long-term I mean at least 12 to 18 months horizon, 4,500 odd levels would be a very good levels to enter.
Rajesh, thanks so much for that view, and indeed for joining us. Vaishali as well, thanks so much for taking the time this Wednesday, and pleasure speaking with you. That brings us to the end of this edition of Ask Profit. Thanks so much for tuning in, and do stay tuned. Up next is Know Your Company. This is NDTV Profit.
That's huge. That is a biggie. It's out.
Gold Class Clear Glass. पार हो या नियर, सब कुछ दिखे clear.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You know, you're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razorpay powers almost 105 of them.
Then there is delivery. This stock has also been buzzing in trade. Dealers are indicating that there's a potential corporate development announcement, some acquisition announcement that the company could do when it comes to e-commerce express delivery space. So keep an eye out for delivery as well.
He sold most of his stock, 80%, as on that date.
We have requested the
Hello and welcome. You're watching KYC, Know Your Company. It's a show designed to give the regular investor powerful, actionable insights into the fundamentals of single listed companies daily. Today we're going to look at transformers and rectifiers. Ironic because we've also looked at power grid earlier this week, and therefore transformers is the other space within the power basket which is in focus. Now this is a stock and a company which has just put out its Q4 numbers, FY25 numbers as well, and therefore of interest. Couple of days where the stock has been buzzing, and it's a space which is very interesting at this point because it's inward facing, not facing too much of that tariff impact, at least no direct impact. Now in terms of why or what the company does, it's one of India's largest domestic transformer manufacturers. Now what's a transformer exactly? It's a device that transfers electrical energy from one circuit to another using electromagnetic induction. So it's a device which allows you, when you switch on a switch or switch it off, the power to get calibrated at the back end to ensure that you are getting power. This device enables the transmission of power through the circuit or through the cable, and it also ensures voltage required to be provided. So both of those. Now in terms of products and offering, let's pull up all the products. It's into a whole host of products, to be frank, across the spectrum. You have transformers, distribution transformers, furnace, rectifier and shunt reactors. It deals across the board with all of these different type of transformers for different use cases, and therefore has that product offering, and also has it across voltages. So it covers various voltages across products as well. In terms of where is it finally utilized, largely in the power transmission and distribution segment right now. There's very heavy capex anticipated in that segment. When we were speaking about power grid, in fact, in particular, nearly 20 to 30,000 crore of capex each year annualized over the next 3 years is the capex pipeline for power grid. So you will have a very large capex coming through, nearly 70,000 crore by power grid alone, and all of that will to a large extent require transformers as well. So that's one pocket. The other one is the industrial sector. They will also require such devices. Now in terms of capacity, let's talk about how much capacity they have. That's how their capacity is split up, but largely around 37,200 MVA, all of that is sitting in Gujarat at this point, and capacity in fact can be increased to 42,000, and that will happen only if similar types of orders trickle through. So if there are 2-3 orders from the same vendor, they actually have at the current capacity the ability to manufacture up to 42,000 MVA. There's a tailwind in the transmission and distribution sector. There is a tailwind in terms of capex. You're expecting around 2.5 lakh crore of transmission capex for the next 3 to 4 years. This is as per industry and analyst estimates, of course. So this is the kind of large size that you have. This is of course across the board. It also includes wires and cables. So maybe that to be kept in mind, and not purely for transformers, but because it's in transmission and because transformers is vital to transmission, you will have this as something which is relevant. And 50+% exposure of the company is to central power transmission utilities. So you'll have all of that which will likely come through for something like a trill. We will speak with CSS Rajora, who is the CFO and advisor to the board of transformers and rectifiers, and we'll get a perspective, of course. But before that, let's try and break this company down. Let's try and talk about the metrics that we will talk about where this company is concerned. We'll start off with the income statement. We'll also look at the balance sheet thereafter, the cash flow, the return ratios, and then we'll look at shareholding, street cred. We look at the order book as well as the outlook that the management has given. And then last off, we look at street coverage and valuations. We've coupled a few of those metrics because order book plus outlook will give us a good understanding of how execution will play out, and street coverage and valuations will give us a good sense of how the valuation is as of today. And therefore, it will give us better perspective. That's how we've kind of broken it up. And joining me today to really help me break this and try and help you understand this better is Anushi Vakharia. Anushi tracks the power space closely and therefore is going to be helpful in trying to break this down. Anushi, let me allow you to start with the income statement.
Right. So now, since the focus right now for transformers and rectifiers is the Q4 numbers, let's start off with that. It's been a strong quarter for the business. This is led by better execution as seen by the revenue numbers. It's reported about a 32% of a growth here, while EBITDA has seen about a 83% of a growth with the margins now standing at 19% as compared to 14%. Now, do note that in this quarter, we have seen higher ticket orders, so because of which we are seeing this margin expansion which is there, but the company did say that for FY26 it expects this number to be in the mid-teen ratio, so bear that in mind. Net profit has seen about a 126% of growth, but a couple of factors which led to this. Firstly, the higher other income along with lower cost of material is something because of which we are looking at such a high profit number for this quarter. But let's look at this annually as well. If you take the last 4 years in perspective, if you are seeing the revenue CAGR for 4 years, that's roughly about 28% of a growth is something that is what we are seeing. And net profit, however, seeing about a 135% of a growth. In fact, if we see FY25 has been a strong year for the business, seeing about a 56% of a revenue growth, margins inching upwards in the range of 16% as compared to 10%. Now, do note that the company has maintained its focus on being completely backwardly integrated. This is by FY27 it's saying. So, operational leverage is something that we should continue to see favoring the business going forward. Net profit also 216 crore is the figure that we are looking at as compared to 47 crore. Again, the factors already mentioned as to why we are looking at such a big jump in terms of where the net profit is. So strong numbers in terms of where income statement is concerned, Harsh, but let's also talk about the balance sheet, right?
Well, yes, absolutely. In fact, the balance sheet also doesn't look all that bad. They've done a couple of fundraisers to pare down on debt. You can see that reflecting in the equity share capital. Also, you can see how long-term debt has continued to remain as is, no real increase or inch up there. And so is short-term debt. Cash and bank balance is also fairly healthy at around 167 odd crore. And for a 15,000 crore market cap company, you're largely seeing debt plus cash really well placed in that sense versus the market cap of the company. And therefore, no concern with regard to debt. And that's at least how this one is looking at this point. Overall, we're giving this a thumbs up because debt, not much of a concern, decent amount of cash on the balance sheet, good free cash flow coming through quarter after quarter. It's a profitable company. Margins are getting better on the income statement side as well, and therefore no concerns on the balance sheet. Cash flow, Anushi.
Right. Cash flow, if you see, we were just discussing about it, how for the 4-year figure, we are looking at an annual CAGR of 4-year annual CAGR in terms of where the EBITDA is concerned, roughly around 28%. But however, if you look at the cash flow from operations, despite seeing overall a healthy picture, we are seeing about a 190 crore of a position by the end of FY25. It's around a 19% of a 4-year CAGR that we are looking at in terms of where the cash flows are concerned. Overall, if we see what has happened in the course of these 3-4 years, we are looking at increase in payables versus receivables. So it's because of these receivables and the trade payables that we are looking at such variation in terms of where the cash flow from operations are concerned. If we take the net cash flows in perspective, the net cash flow for this year stood at about 3.66 crore. This is compared to the March 21 figure that we are looking at, some negative 3.6 crore number is what we are seeing. So cash flow overall, we are giving it on the neutral. That's what we are seeing for cash flow, right?
Correct. And EBITDA, in fact, Anushi, has gone up 48% on a 4-year CAGR basis, but we're not seeing that translate to cash flow. So that's something that we'll actively watch out for, because a lot of that is being diverted towards payables and receivables. Can that change will be the question, or does that remain as is? And now, can growth start to come through on the cash flow side of things? Even cash flow, otherwise, I wouldn't complain too much with regard to net cash flow, Anushi, because they are investing in fresh capex and they are doing fundraisers as well. So investing as well as financing is kind of, there is a bit of churn there, but I wouldn't be too worried about that. Okay, I want to quickly also look at the return ratios. That's something that's on our radar. Now, return ratios have been getting better it's on an improving trend, as you can see. There's also sectoral tailwind with regard to products. You're seeing a tailwind with regard to growth as well. And that top line, the operational efficiency is starting to play out on the bottom line. And I'll just quickly give you the profit number. PAT has gone up from 7 crore in March of 2021 to 211 crore in March of 2025, annualized PAT. And therefore, you can see that real sharp jump, 30x, with regard to PAT, which kind of somewhere is impacting both your ROE and your ROCE ratios. In fact, ROCE is getting even better because on the ROE count, there was some amount of debt which has been paid, and now you're starting to see ROCE really pick up well. So that 15% kind of ROCE number is now jumping up to around 28%. Whether this is sustainable or not is, of course, a big question. And they are also doing fresh capex, and therefore you might see some bit of fluctuation here. But otherwise, the kind of jump that we're seeing from mid-teens to mid-20 plus will be something that it clearly gives this one a thumbs up, especially on their FY25 numbers as margins get better. And also, whether this is sustainable or not, we'll also get a better outlook from Anushi when she covers the outlook as well as order book. So,
right.
but Anushi, why don't you take up shareholding pattern?
Okay, so in terms of where the shareholding pattern is concerned, if you take the last 3 quarters in perspective, we are seeing this promoters holding about 66% of stake in September 24, while this was the kind of shareholding that they had in June as well, coming down to 64% by the end of this fiscal year. Do note that there was a QIP which was launched in June 2024, because of which we are seeing some dilution in terms of where the promoter holding is concerned. Whereas on the other side, we have seen a pickup in terms of where the FII and the DII share is concerned. Around 9.34% was the stake that they held before, which increased upwards to around 11% of a range. And similarly also for DIIs, we are seeing this number from moving up from 7, almost 6.9 to almost 7.2%. Again, even if we see in the last 3 years, 2-3 years, what has happened, there was another QIP issue as well. So considering that overall picture, what was a 70+ % of mix that has come down to 64% by the end of this fiscal year. Public shareholding on the other side has majorly remained in the levels of 17 to 17.5%. It's where the FIIs and the DIIs have shown higher interest for the company, and we are seeing pick up in the stake of these two shareholders which are concerned, right, Harsh?
Yeah, absolutely. And promoters, just quick addition here, they've sold around 27 lakh shares, which is roughly 1% or so, in the month of October 2024. Of course, there were enough buyers to offset that, but they've done it at 780 rupees a piece. Today, stock trading at around 580. So that's probably one of the other reasons why we've given this a neutral. Also, when we're looking at the 4-year picture, promoters held around 75% of the share capital. Of course, they've diluted through QIP, they've diluted through fresh equity raise, but there has been a dilution from that 75 to 64, and there's also been a sale during the same period of time. So maybe something to watch out for. What is the future outlook maybe in the next year or two? And this has happened over the last 2 years alone. Okay, so maybe 4 years back promoters held 75, but the real dilution has happened over the last 2 years through fresh equity as well as through one promoter sale. So maybe something to be kept in mind, and hence the neutral on this count. Let's look at Street Cred very quickly. In the last month or so, the stock is up 32%, so big thumbs up there. Last 6 months up 47% despite all the market turmoil. Last 1 year, stock is up 42%, but the 5-year picture is that the stock is up just about 40% over the last 5 years. So from a short-term perspective, has done very well. There's very good tailwind in the space, and therefore you're seeing that. But over the last 5, it's not done as well. We'll give this one a neutral as well, given that there's no sustained stock performance, right, Anushi? The small and mid-cap space has done very well in comparison to this one when you're looking at the 5-year kind of.
Very interesting picture on the short-term performance of the company, despite the kind of markets that we have seen, how it has done so far.
For sure.
Let's talk about the order book position. I think that's the standout over here for the company. If you look at the order book, that stood at about 5,132 crore by the end of this fiscal, seeing about a 98% of a jump. Of course, it was supported by some high order sizes, especially the order that they've received from GetGo aiding it. Order inflows, if you are seeing, were up around 5.2 times at 2,144 crore for the year. Overall order inflows stood at 4,504 crore. And in fact, if we look at the inquiries under negotiation, the company has stated that the ratio for the number for this stands at about 22,000 crores. So strong order book positioning that the company has. Other than that, even if you look at the outlook forward for the FY26, they've already given us perspective here. Expect around 3,500 crore of revenue by the end of FY26. This is with a margin expectation of 15 to 16% is what we are seeing. The company did say that by the end of 3 years, they're aiming for a $1 billion size in terms of where the revenue is concerned. And again, in line with their targets of maintaining healthy margins, they are aiming to be fully backwardly integrated by the first quarter of FY27. Along with that, we are also looking at some capacity expansion plans which are going to support this revenue growth, including the likes of first phase of new capacity addition of 15,000 MV of IDT transformers. Along with that, some expansion happening in the EHV transformer facility as well. So strong plans in terms of capacity expansion. Also, they've outlined about 550 crore or so for the next 1.5 years. Right?
Absolutely. Now let's look at street coverage and valuations. Very quickly cap it off. There are just 2 buy calls on this one. No sell calls per se, but just the fact that there aren't enough analysts tracking it gives it more difficulty in terms of ascertaining whether this will actually come through in terms of guidance. And therefore, let's try and extrapolate what those numbers look like. The EBITDA for FY26 is expected at 525 crore. The assumptions made here is a 3,500 crore top line in FY26. That's what's been guided. And a 15% margin number, which arrives at a 30 times EBITDA as of today, as of today's stock price. The other thing is the FY28 guidance. The aspiration is to take it to $1 billion in revenue at a mid-teens kind of a margin number. If that were to come through, you will see likely the EBITDA number more than double. If that were to happen, it will trade at 12.5 times FY28 EBITDA. Again, certainly not cheap, but you'll want to look out for this one because growth is extremely strong. Therefore, a neutral. Let me quickly bring on board Dr. CSS Rajora, who's the CFO and advisor to the board for Transformers and Rectifiers India. I want to, sir, quickly first ask you, what is the sustainability of the 19% margin you've clocked in Q4? You've guided for a mid-teens margin in FY26. Is that a conservative guidance is what I'm trying to get to? Or can you clock close to a 20% guidance going forward for the next 2 to 3 years is what I want to understand.
Thank you, Harsh, for having me here. And
pleasure having you, sir.
Before I answer your question, I was just hearing you that you're telling me that promoter has done the block at 780 crore rupees, 780 rupees, and right now the share is 526 rupees.
Correct, sir.
But you forget to mention that this 520 rupees is after the bonus of 1:1.
Correct, sir. Yes.
So that is, and the block was done well before that.
Correct.
Right?
Yes.
So effectively, if you see the pre-bonus, it is 1,020, 1,050 rupees price range.
Point taken, sir. Point taken. Yes.
Coming to your question on sustainable margin side, we have been guiding from the day one that the margins will remain somewhere between 16 to 17% level, and that I feel is the sustainable margin. This sustainable margin. What I am mentioning here is only and only from the transformer business. But what the backward integration activities, what we are doing, is going to be help us in the margin level from 150 BPS to 200 BPS points from the year 26-27. So you can see that once that number will start coming up, there will be a considerable amount of shift into the margin size.
This is Anushi joining in. Now for FY27 is a year that we are looking forward. There's a lot of capacity expansion plans already. One is the IDT transformers that we are seeing, even the extra high voltage cable transformers. We are looking some of capacity expansion panning out there as well. Considering that you already have a strong growth for FY26 and 27, you're targeting around a 3,500 crore of a revenue here. Just want to understand the picture from you in terms of where these capacity expansion plans are concerned. What is the kind of utilization rates that we will look forward from the first to second year onwards? How do you plan to increase it so far? And what is the kind of margins that we will see after once all these new capacities are on stream?
Usually, we are very quick in implementing our plans. In April last year or March last year, we have guided that we will be achieving a 2,000 crore rupees number in this March, and we have achieved that by implementing our planning in a very proper manner. In March, we had started one capacity expansion of 15,000 MVA, and I'm happy to say that next month that will be start the commercial productions. Right. Apart from that, we are also coming up with the expansion of 22,000 MVA in the extra high voltage transformers, and that is going to be in place from February, March next years. This will take us to close to 70 to 75,000 MVA. But here also there is going to be a good amount of the capacity addition because of the operational efficiencies and because of the backward integration activities we are doing. And these things are going to add up into my capacity at least by 15%. So that is the expansion size or criteria what I am telling you. As far as demand side is concerned, see, today we have 5,000 plus crore rupees of demand of order book, and we are aiming to the 8,000 crore rupees of order book by end of this financial year. And this does not include any business any order from the capacity expansion which is coming now. If we add up that, then this is going to be at an increase further. As far as the utilization of the capacity is there, though we have achieved 29,000 MVA this year, but we feel that we are still underutilized. So we aim to utilize our facilities by 80 to 85% by close of the next year. And that is where we are targeting into that.
Mr. Rajora, what I would also want to understand from you is what are the risks to this tailwind in terms of demand? You're in a positive cycle. You're setting up capacity, no doubt, with regard to both capability on execution as well as setting up capacity. There's no doubt financially, in terms of balance sheet strength, you're there. But what could the downside risk be? Could orders inflows start to taper is really the question, and what's the risk of that?
There are two risks which I tell you. The first border risk is that development of the country is stopped, or our grid expansion has stopped, which is not going to be happen. Because the way we have been interacting with the agencies and the government agencies, they are just behind us on the supply side, right? They almost their representatives are at our office, and they want the supplies to be streamlined as fast as possible, and our productivity should increase as early as possible. And they are now not discussing with us 1 year requirement, 2 year requirement. They are discussing with us next 5 years requirement, that how much we can give in next 5 years. Just to give you a very small example of the distribution plan which has been laid down by CEA, as per that plan, from this year, from last year basically, to 2030, CEA has predicted that 392 numbers of 200 MVA plus transformers required every year. And we are not giving them half of that so far because we don't have the capacities. Plus 190 numbers of reactors are required, and we are not giving 1/4 of that reactors. So there is, I don't feel that any demand supply issue is there. Industrialization is growing very fast. Private players are coming up, and it's the renewable energy requirement is going to add up this further, because by next year all the big solar farms are going to come on the commissioning stage, and they will require a huge number of IDT transformers.
Got it.
The IDT facility, what we are putting up, big players are talking to us just to block
Mr.
our
Rajora,
facility.
Mr. Rajora, sorry,
volumes.
I'm going to take maybe 10 seconds in terms of a question. The export demand is extremely strong. There's a 3-year lag there. If you can explain in 30 seconds, why would you want to keep exports capped?
Very simple answer is that for us, India is first.
Okay, point taken. Thank you so much, sir. It's been a pleasure speaking and understanding this, but completely out of time on this edition of KYC. Thank you for coming.
Thank you, and I'm really impressed with the detailing what you have done about our company.
Thank you, sir.
Sir.
Thank you for that compliment. Thank you. Of course, Anushi has really worked hard on this one. So thank you. Thank you. But anyway, out of time on this edition of KYC, we're going to quickly look at the rating very quickly. Income statement, thumbs up, balance sheet, cash flow, return ratios. And we had shareholding, street cred. We also had order book outlook and street coverage, thereby giving this one a 6 out of 8 on our KYC rating. Completely out of time on this edition of KYC. Stay tuned to NDTV Profit. For now, it's a thank you from Anushi, myself, everyone who puts the show together.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razorpay powers almost 105 of them.
Hello and welcome. Good afternoon. This is Markets at 12 and I'm your host Malika Mishra. We will be soon showing you the press briefing of the RBI Governor Sanjay Malhotra after the monetary policy announcement. The biggest news of this morning is the fact that the RBI has reduced repo rate by 25 basis points to 6% and has changed its monetary policy stance from neutral to accommodative, and has also in fact lowered the GDP growth forecast for FY26 by 20 basis points to 6.5%. Now, post the announcement, benchmark indices slipped a bit, with the Nifty and the Sensex trading with cuts of around 0.5% now. In fact, the broader markets are currently reflecting a bit more pain, with the Nifty mid cap 150 and the Nifty small cap 250 also down over 1%. Currently, as we speak, the markets are more in the bear territory, with most sectors in the red except FMCG, consumption, auto and rural. IT index is dragging the most at the moment, followed by PSU, realty and media. top losers, speaking of the top losers in the Nifty 50 basket, there are IT stocks. And before that, let's cut across to the press briefing immediately.
For this financial year and in this new setup, friends, we have with us Governor Reserve Bank of India, Shri Sanjay Malhotra, Deputy Governors, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, and Shri Swaminathan J. We also have with us Executive Directors, Dr. Rajiv Ranjan and Dr. Ajit Joshi, as also other colleagues from Reserve Bank. Sir, with your permission, we'll move directly to questions and answers. Yes. So before we begin, I'll request all of you to please wait for your turn. Before asking question, please switch on the mic which is in front of you, because otherwise people who are listening to this live feed would not be able to listen to you. And also request to switch it off once your query is over. In interest of time, as I always request, please stick to one question per person, and we'll see if time permits we can take the other one. Sir, there are 26 people from media today, and with your permission, we can commence the question and answer. I'll request Mr. Laltendu from The Hindu to ask his question.
Thank you very much, Putin sir, Governor sir, good afternoon, and everybody good afternoon. Sir, my question is about the trade war. You already made a reference in your statement about the noisy trade war that is happening. It started with reciprocal tariff, then retaliatory tariff, then again counter-retaliatory tariff. I could call it a revenge tariff. So whether we should be worried about or not, and what is your assessment of the situation, sir? Thank you.
I think this question, we fairly covered in my statement as to what its impact really is going to be globally as well as for the Indian economy. Globally, you are aware that most of the forecasts now for the GDP growth rate have, for the global growth rate have come down, by at least 20 to 30 basis points, not only for this year, even, for next year. And similarly, inflation, there is mixed response globally for inflation, especially for US, it's projected forecast to go up because of the tariffs that they will be imposing. For other countries, the